Well, holy smokes everyone, it's looking like it's going to be another bloody day on Wall Street. This is a quick update with what exactly is happening in the pre-market. So everyone, let's not waste any time, let's get straight into it. Okay, so as I'm recording this everyone, the Dow is down nearly 300 points in the pre-market, the S&P 500 is down around 1.25%, and the Nasdaq is down around 1.9%. But look at this everyone, the 10-year US Treasury yield jumps to a 2-year high, topping 1.83%. So this is a massive increase in the yield, and we're getting very close to 2%, and the rate at which yields are going up is definitely spooking the markets. So the move which comes after a market holiday in the US Monday indicates investors are preparing for the possibility of a more aggressive tightening by the Federal Reserve. So a lot of people were saying the Federal Reserve is bluffing, they can't lift interest rates, they won't lift interest rates. People, they have no choice. With inflation right now, they have to lift interest rates. And it wasn't so long ago that they were fighting the markets just in 2018. Last week, Fed Chair Jerome Powell told US Senate that he expected to see a series of interest rate hikes this year, along with a pullback in other pandemic economic support measures. And going back to the markets and what could be causing the sell-off, everyone. We already know we got rising yields, but what we're about to head into is earnings season. Companies about to start reporting their earnings, and what I think is going to happen over the next year is, last year we had huge amounts of stimulus, so that really helped boost companies' profits and companies' earnings. But now with stimulus falling down, people in records amount of debt, people's savings diminishing, with inflation weakening consumer sentiment, maybe this earnings will be good, but future earnings, I think they're going to see profit margins slow and revenue growth slow. And we definitely won't see the kind of growth we saw in 2020 and 2021, everyone. So the shortened trading week will feature quarterly reports from 35 companies in the S&P 500, including Bank of America, United Health, Netflix, and Goldman Sachs is also set to post its most recent quarterly figures Tuesday before the bell. So everyone, to put it simple, what's causing this sell-off is yields are rising. We're seeing interest rates are about to go up, and this is going to hurt companies' earnings. We're seeing supply chains are not being fixed. We're seeing inflation getting worse, and we're also seeing weaker consumer confidence and consumer sentiment, which I think the markets think is going to hit earnings in the future. So everyone, it's going to be very interesting to see what happens in the markets today when it opens. Let's see if the downturn continues or if they call in the plunge protection team and people come in and buy up the dip. But what do you think is causing this sell-off, everyone? Let me know.